Hey everybody, this is Brent from Wolf on Wall Street Trade with the market update for the week ending December 6, 2019. I did not do a video last weekend, which would have been this week. One, because it was a holiday shortened week for Thanksgiving. I hope everybody had a wonderful Thanksgiving, by the way. And two, because I spent my Saturday doing a special post for my subscribers on a big opportunity that I saw in the market, and we realized some of that this week. I'll give you a hint. It is here in the title of my last video. And what else is in the title was what the video was really about, which was a change in character. This is a weekly chart of the S&P 500. I made that video at the end of this week and expected the market to close green because Thanksgiving is followed by Black Friday. If there's one week you don't want the market down, it's that week when retailers are making any profit they make for the year get in the black. It's Black Friday, so you don't want consumer confidence being swayed by, say, a market sell-off. So even though the S&P 500 had a good week right here, up 1% the week of Thanksgiving, the price action, that kind of change in character to a more negative or slightly bearish price action, did not change. So I'll give you an example real quick. We'll take a look at, I think, one of the charts I featured, which would be the industrial sector. So this is a 30-minute chart of it, and this is what it looked like as of the end of the week of Thanksgiving when the S&P was up 1%. But this is what it looked like when I made that last video. So my point was that going from a bullish uptrend, bullish flag consolidations, into a bullish ascending triangle over here, that's a failed breakout attempt. And the week ended like this with a bearish flag-like pattern right along this lower support trend line, kind of violated it. So this is one of the changes in character seen in a lot of different S&P sectors. This is a very, very early change in character. That's what the whole video is about. And here is, as of the end of the week of Thanksgiving, did not change that perspective. Here's one more sector, 30-minute chart, the materials sector, bullish uptrend, bullish ascending triangle over here. Attempt to break out and failure, and this is the way it ended the week before Thanksgiving, with a bearish flag. And then that week of Thanksgiving, when the S&P gained 1%, it still traded in that bearish flag below the consolidation. And this is why I say, even though the S&P was up 1% the week of Thanksgiving, it didn't change anything from a technical perspective. So here we are back on the weekly chart of the S&P 500. So this is this week. The S&P gained 0.15% or 15 basis points. The NASDAQ was down 10 basis points or a tenth of a percent. The Dow was down a tenth of a percent, and small caps were up 0.6%. You might get the impression that it was a dull week. In fact, it was not a dull week. So this was a 2.6% range this week. And on a weekly chart of the VIX, this is almost a 45% range this week. And it even closed up about 7 or 8%, yeah, almost 8% on the week. If we take a look on an intraday chart, we'll go to a 30-minute chart of the S&P, or rather a 15-minute chart. You can see that negative change in character with kind of a little bearish flag, but still holding above this. Here's Thanksgiving week. Here's this week. So a major, major decline to start the week. This was actually the worst start of a December since the financial crisis in 2008. Now, let me show you something. Let me back this out a little bit to a 30-minute chart. So by Tuesday morning, the S&P and the Dow had retraced an entire month of gains in just 2.5 days. This is the danger that I've been talking about the last month, with all these red flags popping up and breadth and participation being horribly weak. Was not that, the trend was not still up. It was, but it was the potential for something like this, where the market takes the stairs up and the elevator down very quickly. Now, as to the special post I did last weekend, instead of doing a video, was that the stage was set for a big surge in volatility. And that is a quick way to get paid. This is a 15-minute chart of VIX. So here is that Friday. That move up there on an intraday basis is 56%. Okay, notice here on the VIX chart, what do we have? We have a higher high and a higher low as of the end of the week. So we may be seeing a trend change here. In fact, I think from my last video over here, because it was on the weekend, that's almost a 50% move in volatility when, I had asked, is volatility about ready to explode higher? So what I like to do with these weekend videos is just kind of pick up where we left off the prior week and be able to have context for what we're seeing this week. So let's do that with the S&P. This is a 5-minute chart. So here is Monday's open, kind of declined into Friday as well. You can see over here on that Thanksgiving week. and we got two equal legs down. Okay, this is leg one, a small bear flag, and notice it broke that entire phase one trade deal primary uptrend, made a second leg down. I said my downside target for the S&P 500 was 3070. Here is the low on Tuesday morning. 3070, hit it on the nose over here. And then we started to see into Tuesday afternoon a small bearish flag consolidation. And what I told my members was I think that we'll see this flag kind of widen out into a broader pattern and fill this gap over here. So that's what happened. And then on Friday, we got an overnight gap and started to move towards filling this gap from last Thursday into Black Friday over here. And you can see it kind of acted as resistance most of the day and settled right above this trend line. But here's the takeaway for the week. Here's the phase one uptrend or primary trend. Here is that bearish change in character. Here is last week. So what we did, two equal legs, little consolidation between, and we broke this major uptrend. Now we did close right above it on Friday, or right at it on Friday. The big takeaway though on the week is that we have a lower low over here as compared to over here, and we have a lower high over here as compared to over here. So the very definition of an uptrend is higher highs, higher lows. And you can see that is what has been doing, making higher highs, higher lows, higher highs, higher lows. So this is a big change in character to a lower low and a lower high. Here's the Dow 30, and we have that same trade optimism uptrend. We had a tighter one here that it broke below with this bearish flag, and here's the week of Thanksgiving. We have a wider one here. I usually try to give trend lines the benefit of the doubt and not draw them too tight to show me what I want to see, but show me, what the probabilities are. So here's that break, two legs down. These are two important dates that I've been mentioning for members. So this one is the November 8th closing high for the Dow Jones. Now, a lot of things changed on November 8th, not so much in stocks, but in the FX markets and in bonds. Something big changed, and those markets no longer displayed the trade optimism that stocks were. And then we had this other one over here that I've been paying attention to. That is the July high, the July closing high. And this is one of the reasons that I thought we would get this measured move down here and then we'd see a bounce or correction, which we did. Broke that trend line and closed under it, a little back test below it on Friday right here. And we have the same thing. We have a lower low over here and a lower high over here that's below that trend line. So that primary trend is broken for the Dow as of the close on Friday. From this low, I expected that we would consolidate. This was too tight of a bear flag, but I thought this would widen out to a bear flag like consolidation, which is basically a parallelogram that moves opposite the preceding trend, which was down. So it retraces, it corrects. We can see these things are still in effect in S&P sectors. Those sectors that gave the first hint that something was changing in their price action back here. So here we are back again at materials, primary uptrend, bullish ascending triangle, failed breakout. This was, even with the week of Thanksgiving, S&P up 1%, still trading in that bear flag. Remember what I said about these. You usually get one leg, two legs down, big consolidation, and then often another big leg down. So this would be leg one, consolidation, leg two. And what I want to point out, which we can see on this 5-minute chart, is that this consolidation, this bearish flag consolidation, started Tuesday off the market lows here. So what I said was this is too tight. I think it's going to widen out. Here's the same trend line. That is the same bearish flag consolidation. It's just larger. So here you can see it still have this bearish change in character in price action from a uptrend to a failed bullish pattern to bearish developments on the chart. Here's the industrial sector that I was talking about just before. Went from bullish price action to another big bullish consolidation, but some hint of bearishness, a failed breakout here again. And this is a big leg down, and that is a wider bear flag. So this is what it started like on Tuesday. It was way too small. We had a lot of gaps to fill. So this is basically a bear flag right here. You see this trend line from the preceding down move. Now, believe it or not, one of about a dozen items I touched on for last weekend's volatility post for my members was the price action in none other than IWM, or small caps. So here's this very tight rectangular range we were trading in, and I said it looks just like July when the market topped in July. And it was this move, this breakout, This told me price volatility is increasing. Expect to see VIX increase as well. Now, usually when a market goes up, VIX would go down, but this is playing out just like it did in July, with a tight range, rectangle range, just like over here, with a breakout. So we have that part going from the tight range to a breakout, immediate failure, and then again on Friday, it bounced up even more. But this was what was telling me, one of the things that was telling me that volatility was coming ahead, which we saw this week. Now, I'm still skeptical of this move, of this being a breakout instead of a shakeout. We'll see how it develops, but I'll show you why I'm still skeptical. Here's the 3C chart, 5-minute chart. This is that range over here going sideways. Here is the breakout attempt over here. And notice what 3C is doing. On the breakout, Thanksgiving week, not confirming. Price comes right down, follows 3C. This week, still not confirming. So that's a big negative divergence. There's a real change in character, and changes of character almost always precede a change in trend. So what is the reason for this? Well, like I said, as of November 7th, November 8th, the bond market and the FX market did not agree with stocks anymore. Stocks kept going higher through November, and they started to get very skeptical. And here's what I'm talking about here. This is the Dow, and this is the US dollar versus the offshore Chinese yuan. It is inverted, so we're looking at this from the yuan's view. Early in phase one trade deal, they're both trending together. Okay, so the yuan is excited about a trade deal too. When we get into the November 7th, November 8th area, starts doing the opposite, starts trending down away from what stocks are doing. So stocks are still buying every headline. The Chinese yuan all of a sudden is not. Same thing happened with bond yields at the exact same time. There's a lot of price action that changed right around November 8th. And on a short-term basis, on this sell-off into Monday and Tuesday, the S&P 500 and the Dow reverted right down to what the yuan was reflecting on the week. So this was saying trade trouble while they were trying to rally to new highs in the overnight session before Monday's open, and then traded right down to what the yuan was reflecting over here. President Trump early Monday morning said a trade deal might not happen, not just this year, 2019, but it may not happen until after the 2020 elections, which I think is absolutely right, but that's what got the market rolling here and wiped out 30 days of gains in 2 days. Going through some sectors really quick. As I already mentioned, industrial sector failed, breakout attempt, decline, big bearish flag over here. Material sector, even before this week, okay, failed, breakout here, broke the primary uptrend line, big bearish flag, second leg down, another big kind of bearish flag. Similar to this, it's not a perfect bearish flag, but in price terms, what it's doing is the same thing. Here's XLE, the energy sector, and one of the changes in character I talked about a couple weeks ago was this descending triangle. This is a bearish formation. I gave it the benefit of the doubt because it came after an uptrend. So this is what it's done since then. Pulled back down to the primary trend and came down again this week, made a lower low, consolidated again, and found resistance right here at this former support level. So again, bearish price action making lower highs and lower lows. Let me show you semiconductors real quick because this is probably one of the most mispriced sectors that I can think of. Every quarter for the last 3 quarters, they're saying the fundamentals and semis have bottomed. They haven't bottomed. They've gone lower and lower and lower every quarter. So they keep buying. There's already been a recovery and a bottom, but there hasn't been. It keeps going lower. So if you look at this from a daily chart, it doesn't look so bad. It's just off the highs. You look at it from a 30-minute chart and something different emerges. Over here, bullish flag, breakout, bullish flag, into this bullish consolidation here, this ascending triangle. Failed, breakout right there. This is the week that I said there's been a change in price action. Bounced up here to resistance at the former bullish triangle's upper trend line. Broke down again to a lower low. Started with another flag again on Tuesday. Bounced back up into that again. So the takeaway is resistance. Over here, 1, 2, where they had the failed breakout. 3, 4 times. So that is a bearish change in character, making lower lows. And by the way, this is why I do so much on these intraday charts rather than just daily and weekly charts, because you can see a lot more of what's going on, the tone and the changes in character that you probably would not see on a daily chart. Here's the economically and trade war sensitive Dow transports. Again, another change in character from a bullish flag pull to starting a bullish flag to an all-out break of support and decline. This is what it looked like that last video I did. Here is the Thanksgiving week, rallies into former support, finds resistance, breaks down to a lower low, and this is a pretty classic bear flag. So I'm not going to go through all 11 sectors and all the subsectors, but the takeaway is that the cyclical sectors that should benefit from a trade deal really are continuing to show this shaky behavior. But then when you go to a defensive sector that is a bond proxy that people go to when they're scared, they're looking better. So here's consumer staples. They've been in this huge sideways trading range while cyclical stocks got bid. So they were getting a lack of attention over here. That's why they weren't moving. That's why they're consolidating sideways. By the way, this trend line is not just a 2-month trade optimism trend. This is the primary 2019 trend line. Never broke it. Now, the last couple weeks that we're seeing this more bearish price action in the cyclical sectors, look what the defensive staples is doing. Breaking out, making higher highs, higher lows. As far as I know, this is the only sector that's really doing that. And it's defensive. It's a bond proxy. Market breadth or market participation has been one of the real big ugly red flags that I've been talking about for the better part of a month, probably over a month. This is the Dow Jones in the red and green candlesticks, and this is the McClellan oscillator. You can see what happens when participation starts weakening. You tend to get towards the top. But the point I'm trying to make is that when breadth and participation weakens, it's not a good thing. You can see it here in September. You could see it over here before this decline. This has been going on pretty much since the start of November. And remember, November 8th over in here, we started to see bonds and currencies disagreeing with stocks as well. This actually traded below zero. That is bearish in and of itself. But then we also have this divergence. That was one of the yellow or red flags. So here's the Dow again on a 60-minute chart. And this white line is the percentage of all NYSE stocks trading above their 40-day moving average. The market moves higher. You expect to see more stocks trading above their 40-day moving average. So it wasn't too problematic back here in July. Did get a little sketchy at a couple areas, and that gave us some warning that something was coming. Over here in September, it was actually pretty good. Look what it's been doing all through November. Fewer and fewer stocks trading above their 40-day moving average as the markets keep continuing upward. That is weak breadth, and that's what we saw this week was starting to catch down to that. Now I'm going to show you one. I might have put this in the last video about volatility. I think I did, the absolute breadth index. This was one of the things I was touching on in great detail in last weekend's post for members about volatility. So this is the VIX on a 5-minute chart over here in the red and green candlesticks. This is the absolute breadth index. It has nothing to do with volatility and its construction. It's all about NYSE breadth, like we were just looking at. When it gets down to multi-year lows or extreme lows, even a low for the year, which it did over here, it got down to the lowest since 2017, that usually tells you that you're going to see a spike in volatility. And here it is leading up, and there is VIX making that big move this past week. Now, this isn't a one-time signal like, okay, we got the move, it's done. This is the start. So we got almost a 50% move here. As I was showing my members over last weekend, the moves can be far bigger than 50%. They can be 100%, 200%, even 350% that we just saw in 2018. And so let me touch on commodities real quick. Here's USO. Back here at the start of November, it started a broadening formation over here, and actually several sectors did too, but they stopped that week. USO has continued to do it. First, it was a right angle broadening formation with a flat trend line here and a lower sloping trend line here. Now it's turned into a more traditional broadening formation like we have on the long-term S&P charts. So broadening formation is higher highs, up here higher highs, and lower lows. So that is the shape of what is taking place over here. You see the lower lows here, higher highs here, indecision, chaos, trapped in this broadening range. Here is a daily chart of GLD gold. We don't even need trend lines here. You can see what's happening very clearly. We have kind of either a bullish flag or a bullish wedge. Same thing that we had over here, and that is a consolidation that forms after an advance. So here it is, advance. We got a little triangle in here, another advance. So this is still a bullish pattern. What it is doing is sitting here waiting to figure out, is this trade deal going to explode? Is the economy going to continue lower? If the trade deal explodes, this is a safe haven asset. It breaks out and makes a big move over here. It's still very bullish consolidation. The red flags that I've talked about for probably a good month and a half, 2 months almost. Big red flag in high yield credit. And this was saying there's a big problem with credit markets. The market has turned down a lot sharper, a lot faster on a lot smaller divergence like we saw back here in July. This is just huge. And notice what it's doing. Lower highs, lower lows. It's trending down while the stock market is trending up. So we see this in a lot of different asset classes, not just technical indicators and moving averages, but in credit markets, huge asset class, a risk asset, risk on, sending a very risk off signal. And then we have the treasury market also disagreeing with stocks. Remember, I said from November 8th, something changed. That was that mistranslated headline. Stocks bought it. Since then, the yuan has not, and yields have not. Bonds have not been buying this. They've been sending a divergent or contradictory signal, trending lower as the S&P trends higher. And this is a pretty big divergence. And here's the US dollar offshore Chinese yuan inverted. And again, if you want to know what's going on with the trade deal, if a headline comes out and you want to see, what the official take is from the currency market, which is a much bigger and much more sophisticated market than stocks, and the same thing with bonds, take a look at the yuan. So like I said, from about November 8th right down here, when we got that mistranslated headline, they have not been buying it either. Get some little bounces intra-week, but the trend has been lower. As I've been updating for my members recently, I've been saying, based on where yields are at and based on where the yuan is at, that it's about a 500 to 800 point difference between where the Dow is at. So here we can see the Dow coming into this week. That's more than a 700 point plunge, and that divergence is still wide open. Yields and the yuan could trend even lower from where we are now. We don't know, but this is still a pretty wide divergence. 700, 500, 600 points with the Dow. Big divergence. Here's a quick look at the 3C chart for the diamonds, the DIA, that's the Dow ETF. So this is Thanksgiving week over here, holiday shortened week, negatively diverging into that. We got leg 1 down, flag, leg 2 down, a bigger consolidation over here. And 3C is kind of tracking with that consolidation, started to turn down a little bit on Friday. This is pretty normal action. Here's a little more detailed 1 minute chart. There's Thanksgiving week. Again, not confirming, negatively diverging. Here's the bounce consolidation this week, and Friday towards the afternoon started turning down a little bit there. So wrapping this up, the takeaway for the week is the S&P 500 trending up, bullish trend. We got that change in character over here. This is Thanksgiving week, and this is this past week. So the takeaway from this is that the S&P has made lower low, broke this trend line doing it, and a lower high. The Dow 30, here's the primary trend line. So again, lower low over here, consolidation, and a lower high, and is still below this uptrend. So that's a broken trend and a change in trend from higher highs, higher lows to lower high, lower low. Volatility surged about 50% intra-week, and what we have here is a higher high and a higher low on the pullback. And here's VXX, the Volatility ETF, or ETN actually. And this is one of the things that I really had to get out to my members, and that's why I kind of just, part of the reason I skipped the video last weekend and spent Saturday getting this post out for my members, was that we had seen really persistent selling pressure in volatility over the past couple weeks. This is how we ended on Thanksgiving week, even as the S&P 500 was up 1%. Big positive divergence, and that led prices higher over here. So this week, here's the pullback from the highs. Another positive divergence developing. So I think we may have a second buying opportunity on VIX here. It's also worth pointing out VVIX, the volatility of VIX. What has it been doing all November? Trending higher. VIX has shown relative strength. This, you don't even have to look at the 10-day correlation. This shows relative strength in price terms. And this is this week. So look where we are this week, getting up above 100 into the 105, 106 area. When VVIX is above 100 over here, expect price action in the major averages to be very volatile. That doesn't just mean on the downside. That means you'll see big downside swings and upside swings like we saw this week. Even though the S&P was pretty much unchanged on the week, hopefully you can see that price volatility and that change in prices character and even in some trends in some cases. So investors will probably be lax about the market and be complacent because they look at it and say, well, it was pretty much unchanged on the week. It's not a big deal. Retrace that loss, but the trend has changed from higher highs and higher lows to lower highs and lower lows. All those red flags are still there. Like I showed you, high yield credit yields diverging with the S&P 500, the yuan diverging, the change in price action, the change in volatility, and all those volatility signals that are still active. So I would expect to see more very wild price action like this, but now we're starting to see an actual break and change in trend. One thing to be aware of is there's a very, very big dealer options gamma between 3,100 and 3,150, right about where we ended on Friday. So we got below that on Tuesday and bounced back up. As a matter of fact, this first negative change in character stopped right at that 3,100, bounced right back up to 3,150. This week, down below 3,100, back up to 3,150. These levels, 3,100 and 3,150, very meaningful. They're acting like tractor beams for price. So from what I've heard, following Charlie McGilligan, is that the actual level for gamma to flip would be 3073. So that's right about here where we touched on Tuesday. You get a gamma flip down here, and then all of a sudden, instead of dealers having to chase gamma higher and add to it every time the price moves higher, they will have to sell below this 3073. So this is a moving target, but that is the last level that I heard of. And now we have a lot of gaps below too, so you can see these gaps down here. We could very easily fill that. Here is December 15th. It is on a Sunday, I believe. So next week will be the last week until we get to that December 15th tariff deadline. And I think that's why you're seeing price starting to act a little bit worse. What I think we would probably see, maybe this little gap gets filled on the upside over here. Then we come maybe down into these gaps. I think we're going to see a very volatile week heading into that December 15th trade deal deadline when new tariffs are supposed to escalate. I have no idea what will happen, but I think that we'll see the market very volatile right into that week, probably trading between 3,150 and 3,100 or 3,070. Okay, so that's it. I hope you enjoyed the video. If you did, please give it a thumbs up and go ahead and subscribe if you haven't already. You're here, why not do it? You can always go to the website at wolfonwallstreettrade.com. We do have free posts every once in a while, so you can sign up to receive an email notification when the free posts are out, and you can follow me on Twitter as well. I'll have the links to that below. Everybody have a fantastic weekend. Members, I will see everybody on Monday.